Hello, this is Abdul Hay and the topic of the day is accrual and prepayment. As we know that we prepare income statement for every business for a period of 1 year. Let's suppose that we have got a business, let's say company A, whose accounts that we prepare every year from 1st of January 2010 up to 31st of December 2010. Now what is there in income statement? We compare the income earned during that year with the expenses incurred during that year. So if the income earned is greater than the expenses, then it means that we have earned a profit. Or if the expenses during the year are greater than the income, then it means that we have incurred a loss. Now we have to look after one more thing, that is called the matching principle or accruals concept, accruals convention. The matching principle says that we must compare in the income statement the income belonging to that specific 12 months with the expenses incurred in those 12 months. Income earned during those 12 months and expenses incurred during those 12 months. So it is not possible that we are comparing the income earned for 12 months against the expenses incurred for 13 months. We must compare the income earned and the expenses incurred for a period of 12 months. Let's suppose we rent an office premises and we have agreement that we are going to rent from 1st of July 2010 up to 31st of December 2010. We have got 6 months and all the months are falling in the same financial year. So we record rent expense debit and bank or accounts payable credit. So the expense belongs to the same financial year, but we have got no problem at all because all the expense will be included in the same financial year. And now let's expand our example. Let's suppose that the rent payment is 20,000 rupees per month. So we have got a total rent of 120,000 rupees or US dollars or whatever currency you want to use. Okay, now what we have got here is the rent of 120,000 for a period of 6 months, and that is for a period of falling into the whole financial year ending on 31st of December 2010. In a slightly complicated situation, when we have rented a premises between 1st of December 2010 up to 31st of March 2011. In this scenario, we are covering 2 financial years. The expense has been incurred. Let's assume we make the payment in advance on 1st of October 2010. The expense has been incurred and that belongs to 2 different financial years. If you make the payment in advance on 1st of December, then what happens is that rent expense for the current year will show a balance of 120,000 rupees, and for the next year it will show nothing because when we make the payment of the rent, we made the actual accounting entry. That creates a problem. When we make the income statement, the expense belongs to 15 months from 1st of January to 31st of March 2011. That is the violation of accruals convention or matching principle that we cannot tolerate. What do we do in this case? Our rent expense for the current year should be half of it, that is 60,000, and for the coming financial year it should be 60,000, but at present in our rent account it is showing 120,000 in the current year and nil in the next year. This is called prepaid expenses. That is the expenses that we have paid for the following financial year. The expenses that we have paid for the following financial year, but we have recorded currently in our accounts. So what do we need to do is we need to make an adjustment. And what adjustment do? We have to make an adjusting entry. The rule for adjusting entry is that we make the adjusting entry on the last day of the financial year and make an exactly opposite entry on the first day of the next financial year. In this case, we have got our rent expense account of 120,000, that is 60,000 plus 60,000, but what we want to make it 60,000. At the same time, for the next year we have got zero rent expense, that should be 60,000. That means expense paid for, but that belongs to the next financial year. So what we do is we make an adjusting entry on 31st of December 2010, and the entry is we debit the prepaid expenses by 60,000. That means the amount that we have paid for the following financial year, and we credit rent expense by 60,000. What is this going to do? Our rent expense T account is going to be stated correctly at 60,000. When this entry will be reversed, that means rent expense is debited and prepaid expenses is credited. That means that the next year's rent expense will also show a balance of 60,000. Thank you very much.